Well, David, we've seen a big pullback in the rand from last week's levels, and risk aversion really appears to be building and really triggered by that Goldman Sachs story on Friday. I mean, is the view for continued weakness for the rand for now, David?
Stephen, I think certainly for the short term, for the foreseeable future, the rand will remain pressurized as we try to get more clarity on the Goldman story. But it's not only the Goldman story, because that clearly is dragging world markets lower as valuations are questioned, particularly if it emerges that Goldman's was guilty of any malpractice. But equity markets were looking toppish in any case, just on the back of continued concerns around employment growth, fiscal issues around the globe, obviously Greece and others. I think the Goldman's story came at a bad time for the market because it was looking particularly overbought, overstretched at that point in time, and we've seen further money being taken off the table.
And of course, that Greece story just isn't going away. In fact, a meeting that there was supposed to be a summit with the EU, IMF and Greece, and that's been postponed now because of the volcano which has erupted in Iceland and people not being able to travel. So it just seems to be a whole number of issues that are coming to the fore at the moment, David.
Well, I think that's the point, Stephen. We've had a market that's run up despite some warning signals on the horizon, and not least of which is the fiscal problems facing governments around the world. We've spoken about that before. The market has ignored them up until now, and should we get a situation where the world's economy looks a little bit softish, the question is how are governments going to respond and where they're going to find the money to respond. And that's an issue that's been floating around, and of course Greece has highlighted that issue, and that remains something that's going to be problematic for a long time to come. It's not going to be solved anytime soon, because of course the only way that you can solve those issues is to raise taxes or hope for a better economy and better revenues to pay off those big deficits.
And of course we have the opposite problem in China, where we had growth figures out last week, 11.9%. We know that the housing market has been steaming ahead there. Chinese authorities starting to buckle down on speculators in the property market. How's that being viewed by the market, David?
Yeah, the Chinese growth phenomenon is well entrenched in the market, and I think what the market is concerned about is anything that might show that there's some softness in the Chinese economy, because it raises all sorts of questions about global demand. It raises all sorts of questions about where growth is going to be fueled in the future. Of course, it raises all sorts of questions about currency regimes and what China is going to do with their currency. So anything that might highlight a potential slowdown in China is going to be viewed as problematic, simply because China has been doing so well for so long now, and the growth story is well entrenched. Any problems that might arise on that front will cause some ripples in the market.
Of course, at the beginning of last week, we had our retail sales figures out, and they were slightly disappointing. Contraction of 1.5% in retail sales for February and also for January. And at the beginning of last week, we had the rand trading around the 720 level. So there was talk that interest rates could be cut again in South Africa following last month's cut. With the rand weakening, though, to these levels, just below 750, do you think that's still a possibility, David?
Yeah, Stephen, I think a move from 720 to 750 shouldn't be viewed as alarming. Particularly when arguably the rand was overstretched in any case. I don't think that's a real issue. I think the issue for the government here, and certainly the Reserve Bank, is job creation and how that's going to play itself out. And 30-cent move, albeit in a week, is not going to make a dramatic difference on that side. So you need to stimulate the economy. Retail sales was a problem. Of course, Mr. Gordon also touted the fact that we may have higher taxes in future if revenues don't improve. I think those two issues combine to take a little bit of heat out of the system. And I don't think that a 30-cent move will sway the Reserve Bank one way or another. They will look at the broader economy in general.
Do you think that another interest rate is a possibility then? Of course, we're getting CPI numbers out next week, consumer inflation numbers, and they'll give us an idea of whether we are still firmly in that target range of 3 to 6%.
Well, I think, certainly from a supply side, certainly from money supply growth and credit demand, inflation is benign. The inflationary pressure is coming perhaps from the demand side, from wages increase and cost pushes from the Eskom price hikes. So certainly from that point of view, you could argue for another rate cut as the economy remains fairly subdued. I'm not so sure. I think perhaps the MPC will take the view that a wait and see approach in the next MPC, because there's anecdotal evidence that the economy is improving and that certainly some jobs are being created. And of course, the big question is, what does the economy do after all the World Cup stimulus has been taken out? That all has to be factored in. So I think perhaps a wait and see approach in the next MPC will be a prudent one.
David, we had some new rules for exchange controls that apply to forward cover and currency hedging. They came into effect at the end of last week. Have they had any impact on the rand?
I don't think so, Stephen. I think it just allows greater freedom for South African companies to hedge their exposures and in fact unwind those exposures. I think it's just further relaxation of the exchange control regime. I think what it will do in the future is that in times of duress, we might see a little bit more pressure coming through as importers take advantage of that situation, and of course in good times the opposite will be true. So I think it's simply just it's not a big factor to take into account at this point.
Well, David, of course, for the week ahead, we'll obviously have some uncertainty in the markets that could lead to that risk aversion. Beyond that, where would you see the rand going? Of course, we still have the Soccer World Cup just about 52 days away. Would you expect the rand to resume its strengthening trend beyond next week?
Yeah, I think the news around Goldman Sachs or the reaction around Goldman Sachs will certainly die down. That's a story that's going to take a very, very long time to play itself out. There's so many questions that need to be answered there, and the market will eventually come to terms with the possibility that, or the fact that Goldman's is being charged. I think the greater, as we said earlier in the program, the greater threats are the fiscal challenges that the globe faces at this point in time. And I think arguably for the short term, in any case, equities were overvalued. I think the rand will remain slightly under pressure, and if we get some further economic news coming out showing that that global growth is going to create jobs, then I think we might see some risk appetite re-emerging again later on in the week.